Good morning. It's Monday morning. DCA is here, and everything is, what is it? Day 17 or 18 of crazy turmoil. There are bad things happening all over the world, but there's also strange things happening regarding assets all over the world too, between oil and scarcity and Bitcoin and space and so much more. We have a lot to talk about today, and it's going to be a different type of story. The question is fiat going to zero? And will AI drive the need for hard assets? That's the big question. Anyway, before we jump in, let's talk to Mando first. How are you this fine day, Monday?
Great. This feels... I was a little bit disappointed in the breakout, what was it, a couple of weeks ago, and got rejected and didn't really get involved. I got involved again this time, ready to get hurt again. I think this looks even better than last time. So I'm feeling good today.
Yeah, Bitcoin hit a 40-day high yesterday, so it's even higher now today.
For me, it's the 8 days in a row green. That points to me more like a short squeeze. Particularly, and ETH as well, outperforming as well feels like a short squeeze. I'm not long ETH, but just like you look at what's really rallying, it's like we're going to cause some pain here. So I like this on a breakout.
Good. CTO.
Yeah, me too. Just like Mando, I tried the breakout it was on the 4th of March. I got stopped out, also disappointed. I did try again on this one. And so far it's holding better. And we'll look at the chart later.
Awesome. Marty, what's going on in your planet?
Oh, great. All good. Looks like we could potentially have a V-shaped recovery, which was scenario 1 in my book. Max pain is at 72,677. It looks like they're doing a typical walk back up, running it up, pulling back 50%, taking high leverage and moving up. But I agree with Mando. The duration of higher lows and higher highs is indicative of a short squeeze. So it looks like we're moving up. Regime change, in my opinion.
Yeah, lots of, I call it asset regime change. Lots of things pivoting and rotating around. We'll break that down, including some crazy stuff. But first of all, this is called the AI rotation to hardness. And last week versus now, pretty stunning turn of events here. You can see I didn't quite finish all the updates, but Bitcoin went from 66K last Monday on this show to 74.3. It's fallen down a little bit, about $1,000 since then. Sol 84 to 94. ETH was sub 2,000. I think it's 2,300 now, if I'm not mistaken. Gold 52.40, now 5,000. So despite all the turmoil, this is the strangest thing for me that I want us to unpack a little bit, is the typical risk off stuff has gone a little bit risk on. And what used to be risk on is now risk off, i.e. Bitcoin has been outperforming everything except for oil over the last 17, 18 days. Can anybody riddle me that, Mando? Was that striking to you?
I think the biggest headline over the last 2 weeks was that around this sort of thing, was that headline about physical gold trading at $30 to $50 below where it was trading in physical markets in Dubai. And you think also people who are trying to leave places like Dubai were like, right, well, I've got this gold, what am I going to do with it? There's nothing that proved how important it is to have an asset which can travel seamlessly internationally than this crisis. There's crises like we saw with the regional lenders blowing up a few years ago, and that's like a flight to quality, and like you got to buy gold and Bitcoin rally well there. This is a strange one where like a war has actually proven that one is better in terms of international flows. So I think that's been the main reason for this, honestly, that divergence. I think I was bullish gold. I still am bullish gold, but there is something to be said here about how much better Bitcoin was in this crisis.
Yeah, and unfortunately, the airport was hit yesterday, so people can't even fly out if they wanted to anymore. Things are very bad on the ground in Dubai, etc. And I hope a lot of people that I know personally are there, and I hope they're all safe. CTO, what do you make of the crazy turnaround?
Yeah, exactly. I'm a little surprised that gold hasn't traded higher on this. I mean, the the war isn't going so great, right? It wasn't like a one day like Venezuela or something. It seems, I mean, I'm no strategist or political insight here, but it feels like it's a little bit shaky and not really sure what's happening, and I don't think anyone really knows. And you would think maybe that the traditional gold will rally on that, but it hasn't. So I guess the market, after all things, is going to be fine one way or another. And like both of you said, it was clear that physical gold was a problem there. I read that also banks have put a limit on both withdrawals and transfers. I don't know. I'm not on the ground, so I don't know if it's correct, but I read that from several people. While Bitcoin, you don't need to ask for permission to send it, or you don't need to send it because it's not in your wallet; it's on the blockchain. So, yeah, it's clearly shows the value here of having control of your own assets.
Bitcoin is finding its use case, and it's funny, Mando, you mentioned the Silicon Valley Bank crash. I remember that weekend, people came out of the woodwork saying, how can I get my deposit out of my bank and convert it into Bitcoin on a Sunday? Everybody was like, of course, the traditional rails are dead. But that was the big question. It was pretty nutty. Let's get into the story before we start looking at the charts and stuff. There's a couple. Let's tackle Bitcoin first, because we're now up 11% so far in March, which is good. Bitcoin's never had 6 red months. We had 5 red months before that. That hasn't happened since 2011. So it is turning around. The ETFs are flowing in. And there is a couple of things. Peter Brandt, who is a legend in his own right, he came up with this thing called the horn pattern, which I never heard of. And it might be some hocus pocus of the day. I don't know. But he believes, based on the horn pattern for Bitcoin, we're going to 88,000, which is very bullish. And this guy, I hope his health is doing better, but he is normally pretty dialed in. CTO, have you ever heard of a horn pattern?
I had actually, I'm also a huge fan of Peter Brandt, but I had not heard about the horn pattern. I'm almost not sure if he's joking, if it's like a bull horn or not. But
no, it's like it's literally a tusk.
It apparently it is a thing. But I haven't used. I can show the chart. I kind of like the horizontal levels.
Yeah, I think what he's looking at is a higher lows,
exactly. Yeah. So we have gotten higher lows. We also, this was the level that both Mando and I talked about before. This was a legit breakout here at 7,500 in the beginning of March, but it reverted. But then it tried again here a couple of days ago, last Friday, and now it's hitting up the next major resistance. So this is at 74 to 75,000, and as you can see, it has bumped up there 1, 2, 3, 4 times again today. So if this breaks up now here at 74, 75,000, 74,500, that's a major breakout. Like, because this level goes all the way back here. It was resistance here, then there was support and so on. So if this breaks out now, I'm going to be pretty optimistic. And
that has the Mando 8 or 9 green candles, correct? Is it 8 or 9? Yeah.
8 green candles in a row, I think.
Yeah.
But we don't know for sure, because mentioned Peter Brandt, he also pointed out that this could be a flag like this, like that is not good if we get a flag breakdown instead, if this breaks on the downside, because then it's a bear flag. But we're not there now. We're trying to break above this resistance, and if that happens, we take it from there. If it rejects again, we will analyze it.
So it's the battle of the flag versus the horn. Marty, is this all hocus pocus, or is it real?
No, I think that's what's happening. I mean, the horn is basically just like you just said. It's whether it's a flag or not. If it breaks this level here at 74 and holds it and closes, which it's trying to do right now at 73. Then it can be confirmation of the horn, which is a bullish reversion, a total reversion, a regime change, just like we mentioned. So we'll see over the course of the day. It's probably going to confirm today or not confirm today. We'll see.
Yeah.
It's very exciting. It's an exciting, most exciting point we've been in since autumn last year.
Yeah. And we'll come back to direction because there are some questions on, midterms targets. A lot of people are waiting for that 15,500 level again, and I think it's going to happen in November 2026. But could things be turning around already? Be the shortest bear market ever in the history of Bitcoin. But let's get back into the story because there are some things happening that are super interesting. This guy, Monster Buy from MicroStrategy, they sold $1.2 billion of STRC last week. Everybody's buying this thing, FOMOing into this thing like crazy. I think last week I mentioned they were buying like 3,000 Bitcoin with STRC. What happens if they're buying 30,000 Bitcoin with STRC? And they just bought 22,337 Bitcoin. The majority of it was 1.2 billion from STRC. They now hold 761,000. This was a big buy. And he's doing the right thing because you're supposed to load up the truck when the prices are low. His average price is 75K. And now he's actually reducing his average, and he's been doing that for the last couple of weeks. But the buys have been extraordinarily high. Mando, is he back? Is MicroStrategy alive again?
This is a really good lineup on when the buy happened because, as you said, he bought it when he's averaging down. But also, the reason for this also is that it's going ex-dividend, right? When it's ex-dividend some point last week. So if you bought it before that date, you got the, I think, half of the 11% coupon that was being offered. So there was a huge amount of volume that came in last week and the week before. I don't think it will continue this week, at least at the same pace, just because it's gone now ex-dividend.
Yep.
But what I would say is that was a really good time because there was a chance there where Bitcoin was at 66K and you go, right, this could go lower. And I think it was a big bear trap in the end. And he basically took all of those people offside. So I think a lot of volume went through that week, and he's bought it at a time where he's caught the other side offside, really. So it's really good for the market that this happened, that it was going ex-dividend on the week where it was all a bit shaky, and he's managed to buy. This is one of the first times, and you know this, like he's bought it actually also below where Bitcoin's trading right now. It suddenly looks like a great buy versus some of his other buys. And that's just perfect for like the fear that was in the market last week. And I think this is really good.
It's funny because he's very courageous. He has no shame. He'll always say, I'll be buying the top forever. I don't give a damn. I just want to get as much of this stuff as I possibly can. And this brings us to this story, which ties into, so I calculated yesterday or the day before that in this epoch so far, since April 2024, Saylor alone has bought up 80% of all Bitcoin issuance. Marty, when one player buys up 80% of all Bitcoin issuance, does that alarm you? And then what would happen if there was another player the size of Michael Saylor?
I mean, I'm not alarmed. I mean, first of all, Bitcoin on exchanges is at all-time low again. So
that's what I was showing here. I forgot to introduce that.
I mean, stablecoin market cap's almost at all-time high again. It's turned around. It reverted at 305 billion. It's on its way up, and that's our primary correlation. Then if you look at strategy now, he has 768,000? What's it? 761,000?
Yeah.
He's nearly at BlackRock. I mean, that's clearly the race. BlackRock clients now own 780,000. Coinbase at 1 million. So, I mean, the accumulation continues. Michael Saylor, I think, is trying to catch up or pass BlackRock, which would be very significant. And then we still have Morgan Stanley coming online. We're not sure of their strategy, but they clearly must have also bought the dip. So, absolutely, I think all indications are that this has been a massive accumulation of the major players. And a lot of people will look at that and say decentralized money, scarcity, it's bad. Centralization through ownership. But I think at the end of the day, these people believe, they have conviction like we do, long-term holders, and they're buying the dip. That's what you do.
And regarding Morgan Stanley, in case people missed that, Morgan Stanley are late to the party, but they're coming out with their own Bitcoin ETF. And before you start a fund, you have to seed that fund. So, Marty, you could be correct. They may have bought some bags to pre-seed the ETF fund and then sell it back to their...
Very excited to hear. Watching the SEC daily when we see those applications get approved. I think that'll be another massive catalyst for this asset class.
Yeah. And I hate to use these terms, but I'm going to go to you, CTO. Lowest balance on exchanges since 2017. I don't want to use the term supply crunch, but hell, I will. Screw it. What happens if the stacking continues at this level from players like MicroStrategy, and you have MetaPlanet coming back, you have Strive coming in as well? It's like the DAT's got a really bad kick in the teeth, and now they're FOMOing in again. But since you've been looking at this for a long time, like I have, 2017 coincidentally was the first time I bought Bitcoin, and we're back at those supply levels on exchanges. So somebody is sucking all the Bitcoin off exchanges. The long-term holders have clearly done selling for now a couple of months. What do you think?
Yeah, so I think two things here. One is, like you say, like MicroStrategy during the bull market, we could see every time Michael Saylor and Strategy went in and bought, we could see it in the price before the announcement. So one person, one individual on this earth is enough to move up the price, like substantially. What if we get two of those people, or maybe three? That would be enough alone to really drive the price massively up. So that is 100%. Then this exchange balance on the exchanges, I'm not so sure that it's like enough to look at, because just looking at my own behavior, I'm much more wary today to leave money on exchanges than I was in 2017. When I also started 2017 there, I didn't understand the risk of leaving money on exchanges, but I think more people do so now. So it could also be that they have funds available that just hold them outside the exchange, then move them to the exchange to sell it, or they simply use decentralized solutions to sell it. So I'm not sure we see the complete picture looking at balance of exchanges, because it could be another explanation to that. But yeah, I do agree 100% that we just need a couple of enthusiastic people like Michael Saylor, could be another bank, could be another financial player, and this will run up into very large numbers.
Yeah. And looking at the numbers, Mando, over to you. If like the ETFs have sucked in, if I'm not mistaken, about 1.57 million Bitcoin. And that includes ETPs around the world, not just the US ones. You've got Saylor at 760. So call it 1.6 plus nearly 800,000. That's 2.4 million Bitcoin in these two vehicles alone. Could this be the reason why the balance on exchanges is falling so fast? And remember, in 2017, there was a lot less in circulation than there is today. We just hit 20 million Bitcoin too. So back of the napkin math, something is sucking from the supply, and it's really showing up right now. Would you agree with that? Muted.
On mute, Mando.
I do think the ETFs turning more bullish has been one of the main changes in the flows. There was that piece I think JP Morgan put out last week or a couple of weeks ago, which showed you the flows since the war began between ETH and gold, the ETFs and gold, and suddenly you started to see big outflows from gold funds and inflows into these crypto funds. So there does seem to be kind of a cross asset movement into crypto, which is a good sign for the exchange flows. And yeah, I don't know exactly if like the exchange balances the balance of Bitcoin and ETH on exchanges is that predictive, because I think it can be slightly gamed, but I think it probably does show that it's moving into, even if it's being gamed, I do think it's being, that shows you how bullish that people are. You know what I mean? They're trying to signal that this should be going higher. So yeah, I'm more bullish on the ETF though. The ETF flows seem to be the obvious one to me, and you can be tracking them. And that's the first time I've seen a shift away from gold into crypto for a while.
Yeah,
I mean, I think the narrative, guys. I think the narrative of this war. I mean, understand that the world is breaking apart. We're going multipolar. There's multiple reserve currencies, more sanctions. People are moving. Rich people are moving. I think we're underestimating that. I think that's when Bitcoin shines. It's the whole story. You know, if you can put all your wealth in gold, but you can't travel with it. I think this is literally what's happening. Gold in Dubai was selling below benchmark, and Bitcoin was selling above in Tehran.
Yeah,
I think that's the primary driver here. The use case is once again shining.
It's funny you stepped on something there, Marty, which is so interesting. I've written 4 Substacks on, or I call them Orwellian tax regimes. All of a sudden, you have state and local governments, you have countries. All of a sudden, they're huge budget deficits, and you know what's the first thing they do? It's like, let's tax the rich. Yeah,
correct.
Let's hit those guys, and those guys are like in December 2025, there was in California. There was talk of that 5% billionaire tax. Half of them left, gone, poof. Like, I always say, money gives you wings, gone. And then at the same time, I have friends in Europe, and they're saying, not in the terms of how can I convert this cash or fiat or wealth into Bitcoin and I can stick it offshore somewhere so it can't be taxed to death. I've had those questions more in the last 3 months than in the history of my life. Has anybody else heard that from people?
Oh, 100%.
Absolutely. I think that I've thought a lot about it. I think the world will polarize. Some countries will come up with the idea, let's squeeze the remaining 1% more and get the money that way. And another set of countries will take the opposite approach to the same problem. They will try to attract that person instead and all his or her friends and buddies. So I think the world will polarize into these 2 categories, and one will be more successful than the other because it will be very difficult to build another Berlin Wall, even if they will try with an economic wall, but to stop people from moving. But in the end, it will be very difficult when there are things like Bitcoin, digital work, and all that stuff. So, but yeah, for sure, this is happening 100%.
And we've seen it happen in a place like Sweden, Norway, United Kingdom for the last decade plus. We're seeing it happen in the United States right now, Washington State, California, New York, and they're all going to Tennessee, Nevada, Florida, and where's Texas.
Absolutely.
I mean also don't forget Iran was mining Bitcoin at $13-20 and selling it for 60. They possibly acquired hundreds of thousands of Bitcoin mined over the last 5 to 7 years. So the timing of this entire turnaround also with the bombing of Iran's power station and power grid, it's also very ironic to me.
We're going off on a tangent here, but something actually very interesting happened too. So if you look at some people, they store their wealth in what they think is a safe place, like real estate. Real estate prices in Dubai have tanked 25% as of Friday last week, and they're probably down 30% today. Everybody is trying to sell their assets. Nobody is buying. The market is dead. So what you thought was a nice, safe $2 million condo in a tower somewhere has now almost no value, which I've never seen I've seen some shocks to real estate happen, but I've never seen 20% lost in a week. Mando, did you hear about that as well?
Yeah, look, a large bit of the Dubai economy is real estate, right? And a lot of the real estate developers are like levered. So I think a lot of people are like posting the stocks of these companies, and actually that's not necessarily that reflective of like the real estate prices rather than like the actual developer. But yeah, it's bad. I have people who are out there who say it's worse than is being portrayed. Let me put it that way. There was a strike, I think, on the airport over the last couple of days, and smoke all over Dubai apparently from that. That's what a friend messaged me and said it's strange to be there right now. That being said, I think I'd still be a buyer. I'd be a buyer on a dip of Dubai. The conversation that we just had is one of countries going in different paths, and Dubai seems to have chosen its path, although its location means that it could still be at the center of all these sort of issues. I think it's interesting, like the UAE, it's not like Switzerland. It actually hasn't played it that safe on the geopolitical stage, particularly with like who it's funding and various different groups. Like it has an agenda, and it's not really that friendly with a few of its neighbors, Iran, Saudi, like it's been mixed in the past. So like, I do think it's going to be a bit of a challenge here to some of these cities that are trying to claim they're going to be, the cities of the future. They may decide that they're going to play it a bit safer, let's say, in terms of geopolitics in the future.
Yeah, definitely. And
I do think it will bounce back also. I want to say that I read somewhere that it takes 13 months for people to forget what happened in the history. So around that time, people have forgotten about this. Like COVID, people said that it will change the world so much. Now, it's COVID every season. No one remembers it anymore. So I think it will bounce back, but it's bad there for now.
I like that 13 months.
To me, the most striking thing over the weekend has been just the unsurmountable amounts of fear mongering on the timeline, the amounts of dooming, Armageddoning, fake information over this war, just absolute garbage nonsense going around. I mean, have you seen this new Canadian lecturer, Zhuang Xing? Have you guys watched that? He's been basically calling for the end of the world, the end of Dubai, all of this stuff, and people have been sucking it up, especially the newer generation. They're just literally sucking this stuff up, creating this sort of self-fulfilling prophecy, just like the Bitcoin bear market to me. Like
you led right into the next topic, by the way.
Sorry, I just want to bring that.
No, that's a very, very, very good point, because doomers live for these moments. They sit in a cave somewhere and they wait for the sky to fall, and then they start celebrating and dancing on graves. Look, I told you so. And they are right 20% of the time. But this takes us to this next topic that everybody's concerned about. People believe the cycle will repeat, which means the bear could be in October. I would argue, again, Sailor alone, from all the math that I've done, forget the ETFs, Sailor alone is enough to keep this market afloat. Again, long-term holders, big people ditching or buying, the retail investors are DCAing aggressively every week. Not that it's really enough to move nearly a $2 trillion asset, but let's talk about this. Are we looking at the so-called, excuse the crude graphic, midterm bottom, November 2026 for Bitcoin? Or is that out the window? We're already bottomed at 60K, which a lot of data, that should be a 60J, not 60K, not 60J bottom. Thoughts on this one? Let's go to you, Mando, first, and then around the table.
I don't think we're quite out of the woods just yet, although I do think this is a strong breakout, like I said. When it's 8 days higher and we're breaking out of a range that we've rejected a number of times, and then we were in that range back in 2024 too, it's a good sign. And what I was speaking about 2 weeks ago, which is like the FOMO of this is high. Like, this isn't Bitcoin bouncing back at 90K to go to 95. This is like Bitcoin's was down 50%. And people who didn't buy back in would be like, oh God, maybe I should have. So I think the FOMO is much higher at this sort of stage than it was at other points. I've learned a lot from CTO on this show, and I'm in the wait and see mode still. Like, I wait to see if this is going to be proven to be a more long-term breakout, and there's like longer-term indicators that I would look through for that in terms of crossing above moving averages. But so for now, I think it's a bounce, and it's a strong bounce that could take us to the 80s. I don't know if it's a reversal of the trend. My gut still tells me that the trend is still has not been broken back yet.
We're going to get to another catalyst for this whole space in a minute, but quickly from you, CTO, what do you think? November bottom, or have we bottomed at 60K? And I'll tell you my answer. I think we bottomed at 60K already.
Yeah, I tried to just go with the flow here. And I mean, if we get the 74, 75K breakout, I'm going to add more. And then if it turns again, starts moving down again, I offload that perhaps in some profit. And I just take it as it comes. I don't know for sure, but I'll just play the market we get. If it trend turns up, the mega bull trend turns down again. Okay, let's look for the next lower bottom. But I take it one step at a time. And we already had 70,500 breakout. I added there. I'm going to add more if we comfortably break out the 74.5 level. and then I'll take it from there.
And I entered a big position, my biggest buy since probably 2021 at 64K. And that post was posted. Marty, what do you think? November bottom or early, or have you bottomed already?
Oh, in my opinion, we've bottomed already. I mean, the things I watch is obviously stablecoin market cap. I think that is the primary driver of crypto prices. And that turned around very clearly and is on the way up to all-time high again and is not stopping. I think stablecoins is the new petrodollar. I think it's going to explode past 320 billion and Bitcoin will follow. I also look at the crossing of the 800 daily SMAs. I mean, they crossed on February 20th. To me, that's the bottom. Since then, we've traded with higher lows, higher highs, unstoppable. So I look at those primary things. But then, I mean, there's always a non-zero probability we come back to the 200 SMA, which on the weekly, which is currently just crossing 60,000. I don't know if you guys saw that. But now, with this duration of this lower little trend here, we've crossed now, the SMA is now 60, just over 60,000. So that looks like our bottom is 60,000. Could we revisit it? Absolutely. Why not? There's a lot of long leverage liquidations down there. They could take those very easily. Could be the V-shaped recovery down to there, like we saw in the previous bottoms. But the strength of stablecoin right now and regulatory pressure, I just think, and Marcus Saylor and BlackRock, Coinbase nearly back at $1 million. I just think it's undeniable that the trap has been set. I think they're trapping bears at this point.
Yeah, and there's a lot of analysts are calling for that easy path to $1 million Bitcoin in today's world. We'll get to that story as well in a minute. But people do have a little bit of, how do I say, gun shy, kicked in the teeth too many times. PTSD. Buy the dip, the meme, bought the dip, buy the dip, buy the dip.
I've never seen so much PTSD as right now in my life.
Yeah. So it's, people, they don't know what to do and they're afraid, and the bears are dancing on graves and super excited that they're going to get back to 15,000. You got people calling for $10,000 Bitcoin. People who have been literally Nasib level bearish for decades and probably have no Bitcoin, so just hate the asset, and they're just saying 10K. But people listen to these people. So the question is, should they be DCAing aggressively or wait for a better dip below that 60K support? In this chart here, you see my crude little line, 60K support. I think we could have that double bottom potentially. If we get a black swan, it could wick right back down there, but I guarantee you if it does, the nature of people who've been waiting to pull the trigger and they miss the bottom because they don't have the courage, the next time it happens, they do, and it gets bought up pretty quick. And that's just the nature of markets.
That's it's the right answer. If everyone's waiting for 60K, then chances are you're not going to get in at 60K.
Correct. Yeah.
Yep.
I forgot to say that exactly, just to pick up on what you said, James, because now it is a double bottom. Like the definition of a double bottom is that the high between the bottoms is breached, and it has. So now it is a double bottom. Like when it happens, you don't know if it's just part of going lower, but now it has gone up above the high between the lows, which was at about 70,700, I think, something.
And there's your two big rings there for the double bottom, correct?
Exactly. So these are the two double bottoms. And when it happens, you don't know, right? You don't know. This could as well at this point just continue like this. But when it goes up from there and crosses the high point between the bottoms, then we can discuss, was it here or was it here? But it doesn't matter right now because it's above all of them. So right now, it is a double bottom, which is a bottom pattern.
And I love double bottoms. I've been looking at them in stocks for 36 years, and they work. So it sounds really crude and simple, but sometimes the best things in life are. Mando, what do you do if people have no Bitcoin bag? Should they be DCAing now or wait for that magical 60K again? Or do you believe in the other two saying we've already hit the double bottom? Might be muted again.
I think it's important to what Marty said there, which is that most bears are still pointing to that 200-week moving average, which is now kind of where we already hit. So if we were to go down, it would be only round to that sort of level. There's no bear like a macroeconomic / war bear. And over the weekend, you hear the most hilarious things about why Bitcoin has to be lower. And they need it to go lower, and it gets progressively more crazy in what they think is going to happen. If anything, I would say that the realm of possibilities is shrinking here. And I also think China's move for Taiwan, which would be maybe the final ultimate reason why on like a geopolitical reason why you could see that sort of a massive dip in Bitcoin. So I think you're running into the only real reason why that would happen, maybe like a broader stock sell-off on the back of continued unemployment and maybe the Mag 7 breakdown, and that causes a little bit of weakness. But is that bearish for crypto and Bitcoin? I still think that could lead to massive money printing as the result. So I'm still pretty bullish there. I have to say, like this time I didn't buy necessarily as much Bitcoin as I wanted this time. I got involved in a few alts. I bought a few different things, but Hype is definitely my biggest bag right now, just because I felt like that has gone mainstream. And I think I was talking about it on the show last week when it was doing that, and that's been a really good trade. And I'm holding that. I think Hype. I think Hype could have a Solana style move going into the bull market next cycle, like Hype to 50 plus, maybe even 100. Like it looks very similar to that Sol when it went from 10 to 100. I'm really bullish on Hype here, just because I think it's going mainstream. So that's my biggest bag.
Yeah, I can agree.
We'll talk about those perp dexes in a minute, because there's a huge narrative underpinning them as well. But sorry, CTO.
Yes, I agree. If looking at the whole market, Hype is standing out against almost all the other coins. Like in the backdrop of all the other 10,000 coins, Hype is standing out right now. I also bought Hype on this recent breakout. I feel the same as Mando.
Yeah, good stuff. Okay, let's get to the next story, because AI is a huge narrative. We've been talking about it for a long time. Getting to hard assets. We've seen SaaS software completely implode because of AI. We're seeing absolutely horrendous job losses we'll get to in a second. But this piece I thought was very interesting from Michael Saylor, who responded to Chamath, how Chamath all of a sudden is jumping on the bandwagon of getting into scarcity in whatever form it takes. But Saylor said, if AI compresses terminal value and makes every moat temporary, capital will rotate to assets with no disruption risk. Bitcoin is digital capital, scarce, neutral, impervious to AI disruption. Bitcoin should be the primary beneficiary of this shift. We have spoken about this countless times in the last 18 months, maybe even longer. And my crude words, I say, in a world of abundance, capital will flow to scarcity. Everybody is now talking about this narrative, just like they're talking about AI agents. So we like to cover stories first before anybody else. Mando, to you first. Do you believe in this?
Yeah, look, I think AI is going to improve capital efficiency. There's no doubt about it. Like when it goes into capital allocation and execution, it's gonna increase the velocity, let's say, of changes between different asset classes. There was that piece, I think it was about a month ago, which was like a study of different LLMs, and they all chose Bitcoin as their top asset to own. These were different agents. And that to me said a lot. Like if you are really going to give an agent their own autonomy and every single LLM chose Bitcoin as its favorite asset, then maybe you will see this. You will see that agents which are allowed to do their own things will naturally gravitate towards that. And I think some have been involved in mining and all this sort of different stuff. So I do think there's something to be said where the LLMs are showing that they might choose crypto. That's like kind of an out there thought, but there is a world here where I think economic agents will have a lot of power, and what they believe is going to be important.
Excellent. There is a second piece, and I'm going to go around the table, but I do want to talk about this too. Elon Musk talked about the end of money. He also talked about abundance and all that good stuff. But this I thought was very interesting, just came out over the weekend. I think money will stop being relevant at some point in the future. I think the AI will not use human currency. It will just care about power and mass, wattage and tonnage. You can't bribe an algorithm with digital dollars. This dovetails exactly into what Mando just said. The AIs, the LLMs, have chosen Bitcoin because they cannot be bribed. Marty, what do you think of the end of money per Elon Musk and Michael Saylor saying the compression will push assets towards and capital towards Bitcoin?
I mean, I believe in it too. I mean, it's the four classic functions of money, right? What is money? You've seen Breedlove talk about that all the time. Also, Lynn Van Elden. Those are common questions. What is money? Like, why are we so obsessed with fiat money? And understand it's only just recent centuries that fiat money even became, last 50 years. But it's a medium of exchange, and there are better mediums of exchange. Technology has evolved. Metcalfe's law. We have better mediums of exchange. Full stop. Fiat money is government trusted. It's never been less trusted. It's never been more inefficient. With global, fractions, conflict, war, migration, trust in government's never been worse. So the medium of exchange currently in the government level on fiat has never been worse. I think it's changing. So medium of exchange, we've got stablecoin. I think stablecoin and crypto are going to be proven as a better medium of exchange. So better money. Unit of account, money is a unit of account. I think crypto is a better money unit of account. Full stop. Store of value, that's the kicker, right? Bitcoin kind of lost its flavor as a store of value because of the 10-10 pullback. And once again, I just call that the self-fulfilling prophecy. I think once everyone started to sell, the Benjamin Cowan theories, everyone follows suit, and kind of that's what happens. So that's really number 3, the store of value thing. We need to prove that we have a better store of value. And gold has obviously taken that sort of crown. But I think the paper gold dilemma is rearing its head again. Paper gold, it's 300 times oversubscribed to physical gold, things like that. So that's for debate. But I think we have better money. I believe Elon Musk is correct. I think with technology, there is better money. And if you look at the 4 core functions of money, we have better versions of technology. Yep. So, we used to use bear grease and buckskins. We've got this obsession with that. That's very recent, the dollar. Very recent.
Yeah. Anyway, I remember pelts being very valuable up in Canada back in the day, taking them to the United States. Anyway, back to this. I like what both Mando and Marty said, but I want to hone in with CTO on wattage and tonnage. What does Bitcoin depend on? Wattage. Money is tied to power and hard assets tied to tonnage. What do you make of this craziness?
Yeah, you're absolutely right, of course. A lot of people say that Bitcoin is not based on anything. Well, it actually is. It is based on proof of work, which requires that electricity to produce it. So it is based on something that is not easy to fraud or fix or buy. You can't go, you can't go downtown and buy enough electricity to, take over Bitcoin or something. There isn't that much electricity and mining equipment to buy. You can't do it. So of course that is 100% true. Then on the other points, I'll say it on every single show that I have a chance. Like in the AI era, you have to build assets. Building some skill is not enough if it's a skill in front of the computer. What matters is building assets of some kind and learning to build assets. That's what will remain in the AI era. Then will money become unimportant? I don't think so. Of course, like in Elon Musk's day-to-day life, it's probably not important. He still prefers to sleep under the desk, on a $10 pad because he likes to work and likes to create those things. But if he didn't have the money, he couldn't have bought X. And I think he's collecting resources because he wants to take humanity to the stars. And it will cost a lot of money, and no one else is willing to do it. And I do think that money will remain important. Like money is unimportant unless it's finished, and then it becomes everything. If the money is finished, it becomes everything for many people. So I do think that assets, money will remain important. And I do think we will have fiat in some kind of form for foreseeable future, but I think it's going to become less worth per dollar.
Yeah, definitely. Fiat's going to zero. The math is clear. The printing will continue, especially also in the age of AGI. In fact, I don't know if I showed it, but there was some terrible, I think it's slide 16. Give me a second. Terrible news out there on the job front. And we have governments that say, oh, AI is not affecting jobs. Just in the past couple of weeks, Block, 45% of the staff. Amazon, 16,000 jobs eliminated in January. Oracle planning 20 to 30,000, probably on the higher end, 30,000, because they have no free cash flow to fund their data centers. So instead, kind of like the last resort is they're going to get rid of people to save money to fuel the data centers, which ties back to AI. Meta, same thing, 15 to 16,000 jobs. Meta keep taking false turns on AI. That is stunningly bad. And this takes us back to this Fed and the macro snapshot. The Fed, their job, their dual mandate, save jobs, stop inflation. AI is deflationary. The Fed are wrong again. There is now a high chance, a 60% chance, there will be no Fed cuts this year after expecting 3 this year. Mando, to you, our macro expert, is the Fed missing the big picture here?
I think the Fed is in, this is the bearish macro picture I put out before, which is they would have been cutting if it wasn't for this spike in oil. Now, people are extrapolating the current price of oil. It's going to be there for a long time. If this war was to see a de-escalation in the next week, I think oil would crater. So I'm not necessarily buying into forward-looking rates views right now, just because of what's going on in oil, because I think that could change very, very quickly. But it has been said that the macro picture has become less obvious now from this war. I think it was very clear they were going to be cutting. We started to see job losses. We started to see AI affecting inflation. We saw it in the Trueflation figures as well. And you saw global housing continuing to weigh on inflation as well. So it was all looking pretty good to me that we were going to see a cutting cycle. And obviously the new Fed chair is going to make a big decision here. But my gut is that we will still get cuts this year. I think it's a really tough time just with what's going on with oil to be judging the end of the year's inflation.
Yeah, and it's interesting as well because everything is connected. Everybody remember that there's connective tissue between everything we talk about today. Everything is connected. It's very important to spot that connective tissue. Yesterday, I shorted oil at about $100.61 precisely on a perp dex. And getting back to your story, people are wondering what they should do and how they should play this. So I like to play around the edges to generate alpha during rough times. I do believe oil will be solved, or else the Western world turns off, literally, like C-19. And something will be done to open up Hormuz and other places. Whatever that is, we don't know yet. But I think with the huge mean reversion spike of oil, I see it coming down below $100 in the very near term. And if I have to wait 3 months, I can do that as well because the leverage is small. Mando, back to you, because this ties into your hype trade. Now the world can perp long and short gold, oil, copper, you name it. It's opened up a whole world to crypto that never existed before. Instead of just perping crypto, now you can perp everything, and it's phenomenal. Is this part of your thesis too?
Yeah, look, I think Hyperliquid as a venue has proven that it's, particularly over the last 2 weeks, has gone a bit mainstream in the ability to trade some of these assets over the weekend. I think we're definitely moving towards that sort of a world of 24/7 trading and a broader range of things that you can trade. Like when you mix perps with tokenization of all assets, then you get to a really interesting point in the next 2 years.
Exactly. Precisely. Marty, you buy into that?
Yeah, I think the tokenization of everything and these newer venues is a major adoption access for crypto, 100%, and that's only going to increase. I mean, the energy thing, going back to the previous slide, I think is interesting because, people discredit the unbelievable acceleration of nuclear power, small modular reactors. I mean, the US is going to do 4 times more gigawatt per energy by nuclear by 2030. based on Trump deregulation. So, and AI companies have to make their own power. That was in his State of the Union. So I think energy and the storage of energy is going to become a big thing, and also the lower requirements for oil. You know, oil is historically a legacy commodity. Yes, it's used all over, but who uses it the most? China. The US is pretty much oil independent.
Yes.
So this is what they're missing. They're missing this stuff.
That's my thesis, because technically China can't wage war without the Straits of Hormuz open.
China needs oil. Correct.
And they used to get their oil from places like Venezuela, etc. This could be a 4D chess checkmate type move, but I'm not going to go there.
There were only two central banks in the world that chose to move off the dollar standard, and that was Venezuela, which was bypassing sanctions and selling oil to China for one, and Iran, who was selling oil to China for Iran, and both of them have been invaded. I mean, that to me is just, that's the root reason this is happening.
And both using crypto and stable coins as well to circumvent sanctions. So that's also ties back 100%. Into, this is an interesting correlation. I know you like correlations, Marty, but I'm going to give this one to CTO. Every time in history, commercial real estate's in the toilet as it is right now, but regional banks, commercial real estate, they go down, they tank hard when oil spikes. And the question is, how can people play this? Now, this goes back to the big grand vision. I have a vision of being able to perp tokenized pre-IPO stocks, maybe short real estate, tokenized real estate. That's all beginning to come now. And this is a huge world, again, bringing us all into crypto in a big way. But do you believe in these correlations, or will they break down at last, considering commercial real estate's already in the toilet?
I think there's a huge value in looking at correlations. I am a huge believer of that. I didn't know that there was a correlation here between commercial real estate, oil, but I talked about another correlation that was interesting a couple of months ago, which was the one between gold and oil historically, that when gold goes up, oil has often followed, and then came this out of nowhere, and it seemed like a huge coincidence, but it kind of worked again. And maybe sometimes like the underlying risks behind why gold went up perhaps also increases the risk of, like the same underlying factor also increases tension, which can cause oil to go up. So that maybe that's why it's worked. And like commercial real estate for sure is in a very challenging period. Like everyone who previously commuted to an office, number one, the job isn't needed anymore because the AI can do it. Number two, it can be done remote. So of course there could be amazing short opportunities. How is it connected to oil? I don't know, but I'm very interested whenever someone finds an interesting correlation. I'll definitely look more into this one, James. Very interesting.
And in fact, there's another one too. I did go long copper about a month ago because of the global demand, and there is no copper unless they start mining or finding more. It's basically running out fast, and it's a key element to AI data centers. Again, everything is connected. But my thesis on copper has not changed, because as oil typically, historically, just like commercial real estate drives delinquencies when oil goes up, copper goes down. I think that's another correlation that could break this time around. Mando, do you ever look at copper or correlations?
I've been long copper since the start of the year because everyone started getting really bullish on it. Me including. It did look like a clear demand supply imbalance. It's kind of traded like a shit coin since then. Kind of annoying.
It hasn't gone down or up.
I know. It's one of those ones it's just farming me. It feels like. But I think that's another way to play this AI trade. Just get along raw materials. Copper seems like an obvious one.
Correct.
And I mean, copper didn't dump when silver and gold dumped like the worst shitcoin. Copper held.
Yeah, sorry. Maybe not a shitcoin. It's just it feels like one of those ones where it's going to be ranging for a while longer. Every single time I feel like it's about to break out, it doesn't, and then it goes down, and then it feels like about to break out. It's hanging out near all-time highs, right? And it's still not really breaking out, which is very annoying.
Good. back to money makers in crypto. You can see this is the revenue per network for the top 10 blockchains. Number 1, Solana. Number 2, Tron. Number 3, Ethereum. Number 4, Binance. And then Base down the line, etc. Hyperliquid's there, number 9, by the way, 743,000. They used to make a lot more. Do they cut their fees, Mando?
No, I don't believe so. I think their fees are still the same. Yeah.
They used to make as much money as Solana. Solana and Hyperliquid were the top 2.
No, it's daily. Yeah, look, it's had some very big days since the war started, and that was 28th of Feb. So maybe that's been the main reasons. But yeah, you've seen big increases. But what I would say is this is the only one of all those listed that's buying back its coin with the revenue.
Yeah. Marty, why does Solana trade at 19% of the market cap of Ethereum and it makes more money?
I mean, James, the biggest news that came out last week for me was the report from Masari that $986 billion of USDC was traded on Solana in a 30-day rolling period. Versus, let's just go through the numbers.
Yeah.
XRP is $5 billion. Solana is $1 trillion a month. It has unbelievably explosive usage volume right now. Way more than people are reporting on. So I think at the end of the day, that's where it's making its revenue. It's just absolutely killing volume. It's almost 90% of transactions right now on block. And that's basically stablecoin, and that's just starting. I don't think that's going to stop.
Well, it's trading perp dexes, stablecoins, the 3 big money spinners for crypto. And it was back 2 years ago, it was meme stocks and stuff. That's all changed a little bit.
Yeah, and Ethereum, they're not issuing as much stablecoin as Ethereum. I watched that very closely. It's 80% going to Solana. So I just think, I always said it, institutions also want fast, cheap transactions, not just retail. So I think that's what's going on. It's the movement of liquidity between exchanges.
Yeah, you shared this chart, Marty. Walk us through it. Gold
I love this
versus Bitcoin.
Look how interesting this is, guys. First of all, I indicate October 10th there. Can you see where we started?
Let me see if I can blow it up.
The vertical line on October 10th.
It's a your eye chart. Oh yeah, on the left. Yeah, the yellow bar. Okay.
Yeah, and then you can see 100,000 Bitcoin is in the middle, right? That white line.
Yeah.
So you can see the divergence around October 10 after the government shutdown in October last year, where gold
that was 1010 Black Swan, crypto Black Swan 1010.
Exactly. So you see the Black Swan brought us to the convergence around 100K and gold, in terms of gold. Then we saw that massive gold spike and Bitcoin drop at the same time. Look at that. And then now you can see the classic bear claw, right? Is it going to converge back to the 100,000 line? That's the question. But I think it's a very interesting way to look at the market.
Is that the 21 ounces per Bitcoin price, or
it's currently 14.77? You mean the 100K?
Yeah, the conversion. Yeah,
it's 21 million Bitcoin, 21 ounces of gold.
Irony not lost on me. Yeah, interesting. So good stuff. We've got a couple of very brief other stories. People are kind of concerned. A lot of people, and I don't know if they should be doing this or not, but there's a new excitement in town, and that is people who are like 55 plus. They're enjoying depositing all of their cash that they have into STRC and making the equivalent of a salary from income from STRC. Good or bad or a dangerous move, Mando? Again, a lot of money flowed into it. 1.2 billion last week, if I'm not mistaken. Billions are flowing into it. And it's a combination of retired folks and insurance companies. They're the buyers.
Yeah, I want to separate out the two different things here, because I am, as I've said before, I'm not a huge fan of continuing to buy Bitcoin. That being said, if you're owning STRC, I think that's quite a different thing to what I'm saying, which is I do think that is going to be the preferred asset. Obviously, it pays yourself a really nice dividend, and you're not going to get diluted by new equity issuance to pay off any sort of cash flow. So if I was to, I think it's a good asset, STRC. What my issue about it is that it gets prioritized ahead of the common stock. And because of the cash flow like the yield attached to it, it requires some form of like future liability which has to be paid, and that could lead to a bad scenario. But I do like that as an asset. Last week, a lot of people were talking about it as like it would have to fall a lot for it to be Bitcoin to be an issue, and it seems like a good asset to own. If I was to own anything in MicroStrategy, it would be that.
Yeah, in fact, the strategy for many people is we always talk about having at least a 3-month emergency fund, 6-month, 9-month. Well, they're parking that emergency fund into STRC. And not only is it liquid, but it's also very safe and it's generating good reward. Marty, what do you think of this strategy?
I love it. I mean, I think it's the truest, cleanest form of the flywheel, right? It's more demand, creates more issuance, buy more Bitcoin, creates stronger balance sheet, creates more confidence, creates more demand, right?
Yeah.
I think it's the ultimate flywheel, and it's very successful. I know a lot of boomers, including my father, he's in his late 80s, that love STRC. They buy the hell out of it.
Exactly.
It's their way of experiencing the Bitcoin experience. That's the way they do it. That's why they buy it.
Backed by hardness.
Their way of exposing to Bitcoin.
Yeah. Quick thoughts from you, CTO, before we wrap. We're at the top of the hour.
Yeah, I mean, it's been Bitcoin's and gold's biggest problem, right? It doesn't pay yield. So, of course, solving that in some way is very attractive. Of course, it does introduce one risk. It does introduce a risk compared to just holding plain Bitcoin. There's no way around it. Like there is some doomsday scenario and probably will not happen. What's the risk? What's the risk of it happening? Impossible to quantify. Most people will say it's nearly none. But I mean, that's why you can get some yield out of it. There is a little bit of risk with it, but so there is with Bitcoin as such, right? We could all wake up tomorrow, turned out there was a catastrophic bug. Someone solved the quantum in a way that no one thought was possible. There's always risks. So I think it's like a reasonable risk to take.
Exactly. And I always say, don't put more than half of your cash into STRC. Half is fine. And if you look at the expected values of probabilities of something going wrong, say there's a 1% chance of a double spend problem or a quant hack of Bitcoin versus the 11.5% return, the math works out. Again, as long as you don't have all your eggs in that one basket. So that's the devil's advocate approach of everything else. I want to thank everybody for the show. We're trying to keep it to an hour. We have a lot more to talk about, but we'll get to that next week as well. Final thoughts for the week ahead, starting with you, Mando. Somebody said you look like somebody, famous actor or something. I don't know who that was. Luca.
Famous actor? I've been getting, who's that player who plays for the LA Lakers? There's a basketball player people have been saying I look like recently.
Mando's 7 foot tall, by the way.
I'm bullish. I like this breakout even more than I liked last time. I'm ready to get hurt again.
Ready to get hurt again? Oh my God. No, I think it could be a little bit different. So if we look at where we are, zooming out, look at all the damage in the world, look at all the fear, look at what's happening, and Bitcoin's going up. That for me is a very bullish sign. CTO, what do you think?
Yeah, I'm bored to be bearish here in downtrend since what is it, October is soon half a year. I'm bored with it. I can't wait to be mega bull again. Same like Mando. Let's hope we get the breakout here. And
yeah, watch that 74.5 level, guys. Marty, thoughts for the week ahead?
I think the FOMC coming up on the 18th, 19th will be interesting. It's Jerome Powell's last one. I think people are underestimating the May 15th change of the Fed and Trump's agenda. Money printing, lower rates. I think it's all on the table. That could be the reason for this massive accumulation. In preparation for that, I think everything will change.
So
and then also,
you think Kevin? I'm going to double tap into that, Marty, for a second. You think Kevin's going to cut despite the forecast for FOMC, and he's going to money print as well because he's against money printing, isn't he?
No, I think he's actually. I think he's going to basically do whatever Trump tells me to do. That's what I think. I think he's a Trump guy. And at the end of the day, if you watch his latest interview, I mean, basically he supports massive expansion and reindustrialization of the US. You can't do that without insane amount of liquidity. And remember, Janet Yellen leaked the $78 trillion number before she was promptly removed from office. I think that is the agenda, in my opinion.
Yeah. Awesome. Well,
But then
thank you.
also don't forget Japan on the 19th joins the Golden Dome initiative. That I think is a massive piece of news.
That's also will drive a lot of money spending as well. The global security, which ties
Maybe
in
we'll talk about
space,
that next week. Yeah.
ties in Elon Musk and everything. It's crazy, and the X money's coming as well in a couple of weeks. The world is changing so fast. Buckle in, my friends. Don't forget links below for these legends. Follow them all. See you all next week. Thank you, guys.
Thank you, guys.
Thank you.
Bullish.
Bye.